In-depth analysis of the S&P 500 Index, SPX, chart, long-term trends. Summary of recent performance. In our previous report, we highlighted a plus 4.66% surge in the S&P 500 Index, SPX, 2 weeks ago. Although approximately half of these gains were relinquished in the following week, the index rebounded with a plus 1.68% increase, signaling a return to bullish momentum. Current week overview. This week, the S&P 500 Index, SPX, experienced a plus 1.06% rise, suggesting the anticipated Christmas rally might be in motion. The index achieved a new all-time high, reinforcing its upward trajectory. Our conservative S&P 500 strategy, designed to shield investors from bear markets, withstands short-term declines without triggering sell signals. This approach is rooted in long-term chart analysis, avoiding reactions driven by emotions or news events. It is intended to accommodate market fluctuations without attempting to time minor market movements. Market position. We maintain a bullish stance in the RIDEX S&P 500 Nova Fund, RYNVX, or alternative S&P 500 index funds, or ETFs such as SPY. Economic and market context. Last week's remarks by Fed Chair Jerome Powell at a Dallas Regional Chamber event underscored the flexibility of policymakers to cautiously consider interest rate cuts, given robust economic growth. Recent developments. The Dow and S&P 500 Index, SPX, have reached new all-time highs, accompanied by the Russell 2000 Small Cap Index, RUT, which achieved all-time highs for the first time in 2 years. Revised figures indicate the U.S. economy expanded at a 2.8% annual rate in Q3, maintaining momentum as it enters the critical holiday shopping season. Consumer spending, a key driver of GDP growth, increased by 3.5%, slightly down from the initial 3.7% estimate, yet it remains a significant contributor to economic activity. Market breadth and indicators. The NYSE Advanced Decline Daily Chart suggests supportive breadth, reaching new all-time highs. Approximately 71.02% of stocks are trading above their 200-day moving averages, indicating a strong market advance. Economic reports and indicators. The Chicago Fed National Activity Index fell to minus 0.40 in October, the lowest in 9 months. The Dallas Fed's Texas Manufacturing Activity Index saw slight improvement, narrowing its contraction. Building permits and durable goods orders showed mixed performance, with some areas exceeding expectations while others fell short. The labor market remains robust, with initial jobless claims steady at 213,000, below market expectations. Conclusion. The current outlook for the SPX remains bullish. Investors with an aggressive approach should consider positions in the RIDEX Nova S&P 500 Fund, RYNVX, or similar bullish S&P 500 index funds or ETFs such as SPY. The market continues to exhibit strong potential for further gains, supported by favorable economic indicators and market breadth.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.